Okay, European stock markets as we go through the lunchtime here in Europe is pretty mixed, really. As you can see, up a quarter, down a quarter is where we currently stand. As far as sterling rates are concerned today, sterling slightly strong against the dollar, just back to that 160 mark. We've been pretty range-bound for the last few weeks. Euro sterling 84.16. I'll be watching that one keenly as I eye up the cost of my skiing holiday in the Easter holidays. But now it's time for Investors Clinic. The rules here are pretty simple. All you do is email us with your question and our guests answer them. Today we're joined by Gemma Godfrey, Head of Research at Credo Capital, and Lothar Mentel is still with us as well. Thanks very much indeed for joining us, Gemma. Nice to see you. So look, we were just talking earlier about this sort of flow of money that people have been trading out of EM and into sort of lower rated European or US equities. Is that something you've been following, have been engaged with?
Yes, and it is a very interesting trend because obviously up until this point everyone's been very excited about emerging markets, and we're seeing portfolio managers are still heavily overweight. So if you look at the two largest emerging market ETFs, they're actually now larger in size than the ETF on the S&P, whereas obviously the S&P market has 4 times the size of the investable universe. But there is this concern, obviously, because of inflation numbers, which is generating this move. You know, you're seeing China, which, as we know, they're going to come up with their inflation numbers this week, and people are concerned that it's going to really rein back growth.
You know, Gemma, one of the things that I'm trying to get my head around all the time is, okay, let's assume that, and we will see the emerging markets, the developing markets fight inflation and increase interest rates and see their currencies appreciate. Might we not get more appreciation growth from the currency than we're losing on perhaps a little bit less growth on the equity side, so that, you know, once you add it all up in the end, maybe emerging markets plus the currency gains actually still outperform the developing world?
Yes, I mean, I think what's quite hard is to give, as you said, an overall trend, get out of EM, and again, classifying it as one big bucket. And exactly that, I think what's going to be quite interesting is, instead of viewing it as do we get in or do we get out, how do we pick stocks within that? And one of the key things to focus on is, if you get currency appreciation, and actually coming back to the news that came out today with China overtaking Japan as the second largest economy, it was driven by manufacturing. And what's going to be very interesting on the currency side is it's going to mean that manufacturing is going to become more localized. So instead of investing in UK or US companies that are manufacturing and getting cheap labor abroad, as you said, with inflation numbers increasing, that might no longer be such a bull case for those type of stocks. Instead, it's about focusing on emerging market equities that are focusing on their own domestic demand stories.
We've got a question in from Michael, who says the Dow's been up every week just about for 3 months. It's healthy to have a correction. Surely it must come sooner rather than later.
Yeah, and actually I was listening to a few of your, the people that were on before as well, and that whole view about the markets, even if we're looking at the recovery gaining strength, we're still in for some choppiness. You know, that is the case, and it is healthy. It's healthy to have these corrections, and it presents buying opportunities for people that want to get into the markets.
Yeah, that's how I would look at it as well. I think overall, yes, I mean, since the recovery started, everybody said this is going too fast, this is going too far. It will have to correct.
The problem is, if you keep waiting for a correction to happen, the market keeps going up. It's difficult, isn't it?
And actually, quite a key statistic that's come out recently is, if you look at the 50-day correlation between the stocks in the S&P market, it's actually down to the lows that we saw in June of 2007. So exactly that. You know, if you're looking at it again as a trend, when to get in, when to get out, let's just focus on the macro, it's quite hard. But whereas if you look at the divergence of stocks, there are still opportunities there. Is
that for you the key thing here? It's just got to be very, very micro. I mean, what, you know, are you taking a top-down view, just saying, forget that, I've got to find the stocks that are going to deliver whatever the environment is? I
think you need both. And I think when people get blindsided by, again, looking at one data point, I think that's where the risk is. And as we saw, yes, you've got, as I said, the correlation reaching a low. At the same point, people getting worried about Chinese inflation, Portugal last week, and also everything that was going on in the Middle East. They all correct together. So you need to be aware, I think, of both.
Just one thing, we've got a couple of questions on bond yields. How much higher bond yields, government bond yields going, and what impact is that going to have?
Well, because obviously everyone's very focused on, you know, the MPC, are they going to be raising rates, etc. And the risk is heightening that they are going to be raising rates. As you said, you know, the markets are expecting a 25 basis point hike in May. And the concern of that is that it's self-fulfilling. So, you know, the way that yields are going, you know, that is going to be a trend that we're going to see.
I don't actually think so. I think we will get a rate rise, just as a warning shot from the Bank of England that this will not stay forever. But I think with regards to yields, yes, I expect them to go up further. I think the yield curve will steepen a lot more before the cash side comes up, because let's face it, we still have a credit crunch ongoing. When you talk to smaller companies, they still can't get any money from banks, and as long as that carries on, there's a good justification to have very low rates.
Actually, yeah, I heard anecdotally that last week, I think it was more than 10 mortgage lenders, they actually pulled some of their best fixed rates.
Yeah. I think Friday was the we had Ray Bolger on from John Charcoal, and he said there's some great rates today. Get your application in after lunch because they won't be there Monday. So I think you're right, they've gone. Gemma, nice to see you. Thanks for that. Gemma Godfrey, Head of Research at Credo Capital. Now, there's